on you. We're just kind of recording it for other purposes. So we've lost Kathleen's screen some way here. Kathleen, are you sharing your screen? I don't see it on my computer. Is everybody seeing Kathleen's screen?
I see it.
Yes.
Okay.
Yes, we see it.
For some reason, we are not seeing it here.
Switch to shared content over in the far left. Far left.
Where?
No, move over right next one.
There we go. All right, so just so you know, a couple of ground rules before we start. So if you could mute your microphone on your computer so we don't get any background noise, that would be great. The only noise we need is the person making the presentation. If you have a question, there's two ways you can handle it going forward. If you're an ABC member, you can unmute your microphone and ask the question, or there is a chat button at the bottom of your screen, and you can click that chat button, type in your question, send it over here to us, and at the end of the presentation, we will ask the members from George Weiner and Associates or Weiner Benefits Group the question for you. So one way or another, we will make sure that all the questions are going to be answered. So either way, you can choose which way you would like to ask the questions that you have. So with that, I want to introduce Debbie Shears, and Debbie, I'm going to let you introduce the rest of your group. So Debbie is with Weiner Benefits Group. They've been a longtime member of ABC Delaware and very active here in our organization with regards to sponsorships and event participation and also committee involvement. Weiner has handled our benefits here for ABC for the past 15 years. So we're pleased to have Debbie as part of this program to provide you information. And Debbie, I will let you introduce the rest of your group and then talk a little bit about what you're going to cover. So with that, Debbie, the floor is yours.
Okay, well, thank you, Ed. We really appreciate the opportunity to come in here today and to speak with the membership about COVID-19 and all of the things that are happening within our world. So let me just tell you a little bit about who's going to be presenting. Kathleen, next screen. Are you not able to change the screen? There we go. Okay. So your presenters today will be the executive team of Weiner Benefits Group. My name is Debbie Shears, as Ed said, and I'm a partner, along with Mike Reckner and Louis Memolo, who you will also hear from today. And Kathleen Funston Perry is our account executive, and Charles Salisbury does business development. Also included as a presenter today is Dr. Wesley Bowman, who is director of the Delaware Family Center, and we're really excited to have him on board. So I'm going to let him start. He's going to talk about COVID-19 and stresses and panic. So Dr. West, it's all yours.
Thank you, Debbie. I'm going to start, if we could move to the next slide. I'm going to start by reading a quote that kind of explains why life is difficult for us human beings. This is by Jack Kornfield, who's a psychologist, author, and meditation master. And he says, if you can sit quietly after a difficult news, if in a financial downturn you remain perfectly calm, if you can see your neighbors travel to fantastic places without a twinge of jealousy, if you can happily eat whatever is put on your plate, if you can fall asleep after a day of running around without a drink or a pill, if you can always find contentment just where you are, then you're probably a dog. So my point is human beings have certain abilities that are both blessings or benefits and also a curse. And I'm going to talk a little bit about those. So anxiety, of course, is normal. It's necessary. The reason our species has survived for 50,000 plus years is that we have a sympathetic nervous system. The problem is if that part of the brain, that alarm goes off too much, then it becomes debilitating. With this COVID-19 pandemic, what I've seen, I've talked to literally, I think over 500 people in the last month individual groups, families, classes like this. And what I'm seeing, significant, symptoms of shock, disbelief, anger, anxiety, frustration, irritability, just sort of this general sense of foreboding or dread because we don't know what's going to happen. Back in caveman days, that was great because what did they have to do? Wake up, find food, don't get eaten. But the predators in our life are invisible, especially this coronavirus. And a lot of the predators that we have in terms of financial deadlines and other pressures and stresses and dealing with employees and family circumstances, we can't run away, we can't fight, we can't get away from them, and they're relatively chronic, so that alarm's going off all the time. By contrast, I want to reference the third day of vacation feeling. If you think about the last time you took a week or two off, on that third day, you're there, you're settled in, you're kind of acclimated, feeling really good, not worried about going home. Well, that's your parasympathetic nervous system. That's the other side of that autonomic nervous system seesaw. And what we need to figure out how to do as humans is balance that so that we can activate the fight or flight when we need to have energy and adrenaline to get something done, but not more than will overwhelm us. And then when we're not, we need to be able to just relax. The reason humans have difficulty with it is because of our intelligence. We're cursed and blessed with a big imagination. I mean, if you look at the world, look at buildings, houses, artwork, music, bridges, communities, this all came from the human imagination. So it's really good, but our human imagination can also go to dark places, and we feel we can create these catastrophic thoughts. And the other piece that causes us difficulty is what I call forethought. That is, humans, as opposed to other animals in the animal world, animal kingdom, humans know that they're going to die. They know that bad things can happen. Other animals just kind of live in the day. So we can learn from them by kind of keeping a rein on that. Kathleen, if you could switch to the next slide. So what do we need to do? We need to gather accurate facts, useful facts, data that's going to be helpful in figuring out how to move forward. We need to interrupt these catastrophic thoughts. It's like, oh my gosh, what if this happens? Or what if that happens? Or we don't know what's happening. Or what are they doing? Do they know what they're doing? We don't know what and interrupt that by saying, well, wait, right now in this moment, in this situation, that may happen, but it's not happening now. So we need to stay grounded in this moment, in this place, in this time, in this particular conversation, here and now, what's important. So in addition to that, we need to seek reliable support from friends, family, mentors. I've run several businesses of my own and other people's, and had as many as 55 employees responsible for. And now I'm down to 11, which I'm thrilled with. And finding the right support and letting people know when you need it is important, even if you're in a leadership role. So when the anxiety piece strikes, you want to ask yourself, notice that you're feeling anxious and tense, you're having these catastrophic or worrisome thoughts, and just ask yourself, are these thoughts useful? Are they productive? Are they skillful? Are they satisfying? Are they fun? Will they benefit us in some way? And if the answer is no to all of those, if you can't get a yes for any of those, then you need to return to here and now, be grounded, take a deep breath to activate that third day of vacation parasympathetic nervous system. Focus on what is, accept it, pick something to do to give your energy and attention to, do that, and then start over and over again all day long. So while you can't make the anxiety completely go away, you can redirect your attention and your energy so you get things done. With regard to being in a leadership role, my experience has been you need to be able to listen well, listen with empathy and respect. Even if you disagree with the words, try to show some respect for the feelings. Try to give up the notion that you're supposed to have all the answers. With COVID-19, there are no real experts because this is brand new to the world. So remind folks that are really scared or anxious or get, feeling frazzled. We've survived a lot. We've pulled together and made a lot happen. This is going to pass, and we need to support each other and focus on what we can get done. If you don't know an answer to a question, it's fine to say, I don't know. People will respect that. And then when you do know something, they'll believe that because you didn't, say things that you weren't sure about. Asking yourself and associates, all right, what can we do right now today? All these other things are impossible or out of our control. So really a practical application of the Serenity Prayer. Accept the things that you can't change, find the things that you can, and do something about those. Know the difference between the two. And then, of course, the last piece is you want to model self-care. One analogy for that is my Aunt Irene. I used this in the presentation I did a year or so ago with your group. Aunt Irene was a home ec teacher for 35 years, and she made the best pies I've ever tasted. But she would show up at family gatherings with pies that had a little wedge cut out. So I asked her one time, where's the wedge? Kind of giving her a hard time about it. And she said, well, I used to make pies and bring them to school, to church, to family gatherings. And when I'd go back to get a slice, there would be an empty pan full of crumbs and I'd have to wash it. So I'd get angry and resentful. So what she had done years earlier is made the decision before she goes anywhere, she'll make a pot of coffee and have a slice of pie so that she doesn't get left with resentments and an empty pan. Related point, you can't quench anyone's thirst with an empty cup. So you've got to figure out how to cut out your slice of pie, whatever that means in terms of self-care, eating well, staying connected with people that make you laugh and support you and allow you to kind of be yourself. Figure out ways to model self-care for yourself, for your family, for your employees. And I'm going to stop preaching. I think that's all I got. Back to you, Deb.
All right. Thank you, Dr. Bowman. That was great information and a lot of things that we should all really think about. So to dovetail into that, I'm going to speak a little bit about employee assistance programs. Now, Dr. Bowman runs the Delaware Family Center, and they do offer customized employee assistance programs. There are also carriers that will offer employee assistance programs, and they're very inexpensive based on the size of the company. But something to really think about is look at your long-term disability, your group life, or your group long-term disability plans. Many of your plans have EAPs built right into them. I would ask your employer or have your employees ask you. You can let your employees know. Ask your broker what's available in your long-term disability or life insurance policy. As an example, next slide. There we go. So as an example, this is just a sample of an EAP program that's built into a long-term disability plan. This is with the Standard, it's the name of the carrier. And this is just something that can be added or could already be a part of your programs. You can see that this includes up to 3 face-to-face visits and counseling sessions per issue. Now, your EAPs include a lot of different help. You can talk about depression, grief, loss and emotional well-being, family and marital issues, but just a couple of things to bring to your attention. And we're living in this world where everything is unknown. We don't know what's going to happen next, and it's kind of scary. So stress or anxiety with work or family is really key. To have somebody to talk to, like Dr. Bowman just stressed. Financial and legal concerns is another thing that's very stressful. There's a lot of people who are out of work. And they're having trouble getting unemployment. They're having trouble paying their bills. Companies are shut down. These are some of the things that these employee assistance programs through possibly through your long-term disability could be helping with. Also, these include many of them include online will preparation. So as we're thinking what's coming, do I have my will in place? These are things that we need to be prepared for. So you can actually go online. They have templates that are wills. You fill out the information, and then when it's completed, you print it out, and you can take it to your bank and have it notarized or to another notary, and it becomes a legal document. So these are just some of the things that are available to you that you probably already have at your fingertips that are included in another one of your carrier programs that we want to bring to your attention to make you aware of. Check with your broker to see what's available. Now I'm going to hand it over to Charles, and he's going to talk to you about insurance carriers, cost and payments, and what we're seeing in the industry.
Thanks, Debbie. So there's most of the major carriers have made adjustments to help out in this way. We're going to touch on just a few. So when it comes to the ancillary lines, things like dental, vision, life, disability, many of the carriers are dealing or setting up no increases to your rates. As an example, MetLife, customers that have fewer than 500 lives, there'll be no rate increase for all renewals with a June 1st, 2020 through September 1, 2020 renewal date. A few cases are excluded from that if you're a trust, association, or set up through a PEO. Sun Life's another example, whether it's employer paid or employee paid. Things like long-term disability, short-term dental, vision, critical illness. They'll also not have rate increases for the June 1, July 1, and 8/1 renewals, and they'll lock that in for 12 months. Next slide, please. Here's an example of discounts on existing dental premiums. So the previous slide spoke about no rate increases on ancillary lines. Here's an example of discounted dental premiums. So MetLife, for example, they realized that many customers have had to defer or cancel procedures altogether because of the COVID issue. Customers that are fully insured with dental PPO plans, they'll get a premium credit on future bills in the amount of 25%. For the months of April and May. And then with Principal, they're giving a premium credit of 10% for the months of June through October 2020 to employers. And they base that on the previous month's premium. And that's also for those that have a fully insured dental policy with Principal. Hopefully many of you already received this notice. If you have Principal, you should have received an email by May 7th that spoke about that credit. And then finally, most carriers also are giving lenience or dealing with grace periods because many can't make those payments. So check with your broker about options because every carrier is a bit different about how you can catch up in the future. Are there payment plans? Those are important areas to ask your broker about. Currently, we're not aware of any medical carriers, so your major medical coverage, that are making any changes to premiums for off renewal. In the small group market, which is the under 50 groups in Delaware at this time. And again, like so much with this whole COVID issue, these things are constantly changing. It's very fluid, but this is currently what's happening as we know for now. But again, if you have questions like that, please reach out to your broker and they can assist you with that. And now we'll turn it over to Mike Reckner.
Yes, as we know, the government, that Governor Carney actually issued a state of emergency due to the pandemic. And during that state of emergency in the 6th modification, we actually saw a mandate issued to the insurance carriers. And basically what the governor, or excuse me, what the insurance commissioner said was that they were going to freeze cancellations and non-renewals for any policies during the state of emergency. And that's the obvious reason is the economic downturn because of layoffs, furloughs, and general loss of business due to COVID-19. Under that mandate, if a carrier would have wanted to go ahead and continue with a cancellation or non-renewal, they would actually have to get a court order to do so. Now, as Charles has already mentioned, the carriers are being pretty cooperative as far as this is concerned, and as far as we've seen, they've been really cooperative as well. So we haven't not heard of anything where they've gone against this this particular policy. And that did extend to health, life, disability, property, auto, and commercial and business insurance policies. However, we are warning people that this is a freeze and not a forgiveness. So once the state of emergency is lifted, there will be premiums that are going to have to be paid. And, you know, based on what the carriers are doing currently, we would expect that they'll make payment arrangements with everyone. But however, just keep that in mind as we come out of this COVID-19 pandemic. Going forward, Kathleen is going to educate everyone a little bit on layoffs and furloughs, which has been quite a interesting topic recently. Kathleen?
Thank you, Mike. So unfortunately, a lot of you have been aware of all of the different definitions of furloughs and layoffs during this time. This is just a quick refresher. So the furlough definition is really a reduction in hours or the requirement for employees to take unpaid time off. In this situation, they are still considered an active employee on payroll, whereas when you move into the definition of layoff, it's the temporary separation from payroll due to not enough work. So they are considered terminated, but are likely to be recalled when more work is available. And then there's the reduction in force, which is where the position itself is completely eliminated without the intention of replacing it. So again, the consideration is that employees are simply terminated. The reason I go through this is because COVID-19 has presented new alternatives for dealing with things like furloughs and layoffs. So right now, they actually provide the option. So if an employee is laid off, an employer may choose to allow those employees to remain on the group coverage, medical, dental, disability, life insurance, through what they have defined as their period of time. So it's different for carriers. Some are the end of May, some are the end of June or July, even though the employee is no longer actively at work. So effectively, even though they're terminated, they're giving this option to employers. The concern is cost. Many employers are unable to afford to pay the entire cost of the employee's medical coverage, mainly, and can't risk being unable to recoup that premium if it is never brought back to work. So because of that consideration, I just want to go through a couple scenarios because whatever you do decide during this time, if you have layoffs, whatever you do need to be consistent. So in this example, if you have a longtime employee A and they have been laid off, but you would really love to keep them on the benefits until you have work available again. So in this situation, you take advantage of this new provision of COVID-19 and you keep their coverage active. You make an agreement with them, you set up for them to repay their portion through future payroll deductions when they come back. You feel great about it. But then you realize that there's been more than one layoff. So employee B has also just been laid off. In this situation, you just set precedent by what was done with employee A. So now employee B will be kept on the benefits. So this is really important to be aware of because whatever you choose to do, you need to be consistent across the board. And that's also a requirement by the carriers. They do have that language in these provisions as well. So next up is how to deal with these terminations, what the options are for extending COBRA, and what the rehire policies are for when employees may come back to work. So just a quick refresher, federal COBRA, which is what we're going to be talking about today, is for employers with 20 or more employees. If you are under 20 employees, then you would be subject to Delaware State mini COBRA. And to my understanding, this is not impacted in the same regard. So I will follow up on that, but we're just talking about federal COBRA today. So if you decide to terminate coverage through a furlough or layoff, you must offer COBRA. So COBRA can be done in a different way where you offer an actual subsidy for medical, dental, or vision. With this example, company ABC currently pays $300 a month towards the cost of medical coverage. Employee A is laid off and coverage is terminated. They decide as the company that they would like to continue to offer to pay $300 a month towards the cost of the medical coverage. Now, this is only done if that employee elects COBRA. So it's considered a subsidy, or sometimes can be considered a severance. In this situation, the company would want to provide that employee with a type of severance letter, detail the parameters of that subsidy. So how much, the $300, for which benefit, specifically only if they elect medical, and for what length of time. So this is really important because COBRA can go up to 18 months. If you put a policy in place to have this subsidy of $300, but you don't specify that it should only be up to 3 months and then, not eliminated after that. And if that employee does not come back to work after those 3 months, you are now on the hook for paying that $300 indefinitely. So you need to be very clear to the employee in writing and also to your COBRA vendor. So again, that's something that you may be working through your broker on, but that length of time needs to be very clear. The employee would have to follow the typical COBRA guidance, meaning they have to actually formally elect COBRA, and then they would pay their portion, the remaining portion of the premium after your subsidy, to keep their coverage active from month to month. Now I have a footnote here because they have, as of May 4th, there are now new guidelines for extended COBRA election and payment periods, which we will go over in a couple slides. The last note here is just that it's important to actually terminate the benefits of an employee who has left, even if you think that they will elect COBRA. And the reason I say this is because once they elect COBRA and make their first payment, they will be reinstated with no lapse once COBRA is initiated. However, if, for example, the employee made their election, they have 60 days to make their election, and then another 45 days to make the first payment. Sometimes employees, they hedge their bets. They make the election, and then they wait the additional 45 days to figure out if they really need to elect COBRA, especially if there's a transition between jobs. So if you put them back onto your medical plan prematurely, but they never end up making payment, you need to make sure that you're not on the hook for that premium. So it's really important to wait until you have that premium payment from a COBRA election. All right. So the new Department of Labor and IRS rule that I just mentioned extends certain timeframes for employee benefits affected by the COVID outbreak. So the long and short of it is that specifically relating to COBRA, it extends the times for participants to make their elections, their payments, and then it affects a couple other benefits like FSAs with additional time to file claims. So this is in and of itself a big topic. So I'm going to do a really high level. So if you have questions throughout it, just again, send a quick chat message and we can address it at the end. So the national emergency start date is officially determined as March 1st, 2020. The next definition in this rule is called the outbreak period, which is from the beginning of that national emergency until 60 days after the announced end of the national emergency, which unfortunately is still to be determined. Therefore, the current end of the outbreak period is also to be determined. And so what this means in terms of COBRA is that there's a little chart down here. Typically, these are the time frames for when you need to send your COBRA notices, get the elections, and the payments are received. You'll notice that for COVID-19 purposes, now all of these time frames extend till after the end of that outbreak period. So if you can imagine, that means that we're looking at a really strangely long extension of time for when people can make their elections. So on this next screen, just to give you the snapshot, I used an example of an employee who actually would have already terminated. So this could actually be impacting some of you right now in theory, if you've had terminations due to COVID. So if you had a termination March 31st, 2020, typically the employee would get their notice by April 14th, and then that begins their 60-day election period, which in this case would be till June 13th, 2020. Then they'd have an additional 45 days to make their first payment for COBRA, July 28th, 2020. Now, for this example, made up an end of national emergency date of end of May 31st. So 60 days from the end of that would take us to July 31st. So that would be the end of the outbreak period. Let's assume that the employer still sent the notice within the first 14 days. And now their COBRA election period for coverage all the way back to April 1st is actually extended till September 29th, 2020. So that means that if you have anyone who's been terminated during this time period, this is using, May 31st. We don't know when the national emergency is going to be ended. But so just to be aware, employees may actually continue to make their elections and their initial payments through almost the end of the year, all the way back till April 1st. So that was an example for an initial COBRA election, someone coming on to COBRA for the first time. But the other example right below this is for someone who might already be out on COBRA. So if they've been on COBRA since, say, last November, if the last month that they made payment for was February, normally a grace period is 30 days. So for the March payment to have been made, they should have made it by March 30th. When we look at the grace period for April through August, there wouldn't be one because they would have been terminated from the plan for non-payment. But because we are in COVID right now, any payment dates after March 1st that haven't been received now have to wait for the grace period to be extended till the end of the outbreak period. With this example, that means their grace period for paying for March is now August 30th, 2020. Now, to be clear, that means also for any other months during that time, they would need to make those payments as well by August 30th. So it would really be a lot of pressure for someone to make all of those months of payments all at once. The reason I show you this is not to be confusing, but it is to be aware that there are some tricky aspects to this. So if you find yourself in a situation where you have COBRA participants and they're not making payments, there may be some additional things you need to be considering during this time. So just ask your broker, ask your COBRA vendor. It can help you kind of sort through this if it happens. Okay, almost done with this section. I know this is a lot of information. For rehires, if you do have your layoffs and you do end up needing to rehire them, Deb's going to go over what that policy means for each carrier.
Thank you, Kathleen. Great presentation. So for rehires, there are different time frames, impact on deductibles, and other questions that we just need to clear up. COBRA is really becoming very complicated with all of the different timelines being stretched and the pause in the middle. So we wanted to find out what happens with each individual carrier and the benefit for reinstatement. So an example, some carriers may reinstate coverage on the exact date of the return to work. Others will reinstate first of the month following return to work. So for life and disability coverage, if a statement of health or evidence of insurability was previously required to attain coverage over and above the guaranteed issue amount, this is, like I say, for life insurance or disability, then a statement of health may be still required. This is determined by each carrier, and you need to see the carrier for guidelines on the time frame that's allowed for new hires. So it could be 3 months, 6 months, etc. An example of one that we have seen recently is Principal. With Principal, if the termination is coded as a temporary layoff, then when the member is rehired, as long as the rehire is within 6 months, The member will be reinstated with the coverage that they had in force prior to termination. So they would not have to fill out a new statement of health or evidence of insurability form they would pick up. However, if it was past that 6 months, then they would need to fill out a new evidence of insurability. So let's talk a little bit about medical carriers and deductibles. This is really, I think it's going to be a really hot issue. So we went to each of the carriers and asked what their processes were. Aetna AFA, alternative funding option, these are really popular with companies with fewer than 50 employees, with 6 or more eligible. And so with Aetna AFA, they said if a member is terminated off the plan due to a layoff and is rehired within the same plan year, depends on the plan, the employee may come back and any portion of the deductible on his plan that was met prior to the layoff may still apply. So what that means is, let's say you have a deductible of $3,000 and you had met $1,000 of that, and then on April the 15th, you got laid off. So you've already met $1,000 of that $3,000 deductible. Now let's say you got hired back on July 15th. Then at that time, that $1,000 would have carried over and you would still only have $2,000 left to meet of that $3,000 deductible, as long as it's within the same plan year. If you come back on July 15th and your plan renewed, then the deductible would have reset. So it's going to be different for each plan, but that's really a good option, or a good thing to do with Aetna. Highmark, small group under 50. If a member is laid off and recalled within 1 year or less, they are eligible for coverage without needing the new hire waiting period. If a member is terminated and rehired within 13 weeks, they are eligible for coverage without needing the new hire waiting period. However, all deductibles would reset. That's Highmark, Delaware, small group, ACA, Affordable Care Act plans. Now, Delaware Highmark large group 51 plus, if a member is terminated off the plan and rehired within 90 days, the employee may come back and any portion of the deductible on his plan that was met prior to the termination would still apply. Again, as long as it's within the same plan year. So that's like the Aetna AFA, where you would not lose that deductible that had been met as long as it's within the same plan year. For United Healthcare, if an employee is terminated from benefits, the rehire policy will depend on the employer's contract as to whether or not they will have to satisfy the new hire waiting period again. In either scenario, once the coverage lapses, the employee's deductible will reset when coverage is reinstated in the future. And then the other carrier that a lot of companies are using in our area is Cigna. And with Cigna, if an employee is terminated and then is rehired within 3 months, they will not need to satisfy a waiting period and their deductibles will continue on. The member will be reinstated under the same ID number. However, outside of 3 months, they will need to satisfy a new waiting period and start over with their deductible and out of pocket. That OOP means out of pocket. In this case, the member will be given a new ID number. Keep in mind, again, these things are very fluid. These are the answers that we receive from the carriers as of right now, but we don't know what's going to happen in the future. These things are very fluid and it could change from day to day. Next slide. Next slide. Are we stuck? Okay, so we're also going to talk a little bit about COBRA and Medicare. There's a lot of people that are baby boomers. So if any of your employees were born in 1955, they're actually going to be turning 65 this year. So those people will be eligible for Medicare. Of course, anyone prior to that is also going to be older than 65. So, there's a lot of different options, or there are different options that are available with Medicare. So you may want to consider doing an educational seminar for your employees that are approaching 65 or are already there, or there may be dependents who are already on Medicare or maybe on Medicare because of disability. So those are all things to think about. But if an employee is already over the age of 65 when they leave, that can be retirement or termination, and they're laid off, and that means that they are eligible for COBRA. So that 65-year-old or person who is, let's say they're 67 and they've been laid off or they decided to retire, they would be eligible for COBRA. However, there are penalties that could apply if they stay on COBRA for longer than 8 months. So they really need to talk to a Medicare specialist who can help them to navigate through what's the best thing for them to do. If they wait longer than the 8 months and stay on COBRA, then they are going to be subject to penalties with Medicare that will last for the rest of their lifetime. So those are really, really important things to talk about. Now, if an employee is not yet 65, so let's say somebody gets laid off and they're 64, and a year from now they turn 65, but they had already enrolled in COBRA. That's a qualifying life event, and they will automatically be terminated from the COBRA, so they will have to enroll in Medicare. COBRA is considered an individual policy. So when they are once they turn 65 and it's the first of the month of their 65th birthday, then they will be eligible for Medicare and their COBRA will automatically terminate. Okay. Now Lewis is going to talk to you about the CARES Act and a lot of things that have to do with retirement. Lewis?
Thank you, Debbie. I appreciate that. Well, we know about the $2 trillion+ stimulus package, and what we want to do is talk to you about how that the CARES Act was created through that and what impacts individuals, your employees, and yourselves. So really, a few really good aspects to this. One is the Department of Education is suspending payments to student loan borrowers through September 30th. So good news for parents on the call here. That includes Parent Plus. And if you're looking at your auto draft from your Nelnet account, you'll see if there's nothing coming out until October or November. So that's pretty exciting news for parents and their students. But also for employers, you've been able to get this tax credit of $5,250 or deduction for your education assistance program. But now that's been expanded to include eligible student loan repayments for your employees. And there again, a welcome relief for you and your employees. On top of that, there's some relief for housing issues and concerns, COVID-related issues, housing protection against foreclosures on mortgages and evictions for renters. If anyone's facing that, there is an extension for federally backed mortgage loans, and federally backed mortgage loans who have tenants are not allowed to evict tenants solely for failure to pay rent for a 120-day period. So a little bit of relief on that end of things as well. In addition to that, the CARES Act provides us some assistance on our qualified retirement plans. You may be aware of these already, but they're certainly worthy of pointing out. We're hearing from our vendors that participants aren't really exploring this yet because of the delayed impact of financial need in your participants' households. But the CARES Act provides some assistance in your retirement plans. For instance, on withdrawals. Employers may allow participants who have been impacted by COVID-19 to take in-service distributions up to $100,000. And that's without paying the 10% penalty on the distribution, and it extends the tax liability over a 3-year period. Now, the unique aspect of this, it also allows a participant to put that money back into their retirement plan. So if they withdraw and need it in a short term, but can pay it back within that 3-year period, then that's a way for them to get access to the money and then put it back in if they're able and willing. And by the way, the reporting it's self-reported. The participant would have to submit something to indicate that there was a need, but it's self-reported. Another aspect of this is employers that allow loans in their plan. That's in your document. You would know probably by a matter of philosophy or preference whether your plan allows for loans. They can get a loan up to $100,000, and I believe that was $50,000 before. And it extends the repayment period to 1 year after that loan was taken. And it also extends the repayment of existing loans too. Now your various vendors out there, the major ones that I'm sure you all work with, from Fidelity to Empower, Voya, Principal, Vanguard, Ascensus, John Hancock, Mass Mutual, Paychex, ADP, those are the main top vendors out there. They have provided communication pieces and education materials for your participants, and those should be shared. If not already, they should be shared with your employees. And if you need some guidance and assistance on that, just let us know. Regarding individuals, though, in their retirement plans, they've the required minimum distribution will not apply for 2020. So if you're in your 401k, 403b, 457, or an individual retirement plan, then they've relieved you of that need to take that required minimum distribution if you don't need it or want it. So that's good news as well. In addition to retirement plans, the CARES Act also expanded your spending accounts, your qualified spending accounts, like your HSAs, FSAs, and HRAs. And essentially what the act did was it repealed the Affordable Care Act's medicine cabinet tax, is what they called it. And that was where you weren't allowed to get the over-the-counter medications or qualified or medical expenses deducted as deductible expenses from your HSAs, FSAs, and HRAs. Well, that's been reinstated, and now you can use your qualified accounts, your HSA, FSA, HRA, your spending accounts for qualified over-the-counter expenses, and they've expanded that definition to also include menstrual care products and other items like that. Now, as you know, when you use these spending accounts and you go into certain retailers, often the products and services are coded. There might be a lag in that, so it might be a reimbursement scenario if you're trying to do that, and then you get pushed back a little bit from your over-the-counter person at the retailer you're visiting. But just know that might happen. They may not be caught up on how that runs through. But in addition, if you happen to be enrolled in an HSA, you know you have to have the high deductible health plan, the qualified high deductible health plan. Well, for COVID-related expenses, those are first dollar expenses now, including telehealth. So they've waived that deductible on the COVID-19 related issues on your high deductible health plans. So there are some nice additions there. And along with that, because and all of the things that Kathleen and Debbie talked about, they've extended the deadlines and time frame requirements on a lot of your mandatory notices and filings and things like, for instance, on your flexible spending, they've extended the grace period out. And as Kathleen had mentioned, it's a function of the outbreak period and when that ends. And as we know, that's to be determined. But just know that your flex spending grace period has been extended, and it's a function of when that happens and when the outbreak period ends. If you need more individual guidance on that, again, just let us know, because that can be a per person, per plan specific situation. So at this point, I'm going to turn it back over to Charles Salisbury to continue on regarding insurance carrier resources.
Thanks, Lewis. So there are a lot of resources that are available through providers. Most of us have heard of telemedicine. It hasn't been a service that many have used that often. Of course, the COVID issue has sort of forced people into doing more of that. It's a good thing, because you can have access to a physician and not have to see them in person. Teledentistry is probably something new to many of us. Oftentimes a hygienist can actually see what your issue is, communicate with the dentist about your problems, especially if you have an emergency issue. So those are areas, both telemedicine and teledentistry, that many of the carriers are really promoting, and we can take advantage of. Also, many have asked the question about COVID itself. If you're diagnosed, is it considered an actual payable claim under disability? And the answer is yes. Just some clarification. Oftentimes people have been told to self-quarantine if they're around somebody who is diagnosed with COVID. In that situation, if you're just self-quarantining but did not have a diagnosis of COVID, that would not be a disability. But if somebody actually has a diagnosis, then absolutely that could be filed as a claim. Also, most of the carriers are waiving fees, co-pays, deductibles related to any services for testing, treatment, hospitalization, anything related to COVID-19. They're waiving those co-pays and deductibles. And then, of course, the resources, the major carriers out there, they continue to provide updates. They each have links for COVID-19 and various resources that can be used. So we strongly encourage you to use those resources, and of course, speak with your broker if you need more guidance. But the carriers are constantly giving the latest updates as to what things are being covered, being waived, and various ways to help us as we get through this crisis. And now we'll give our attention to Mike Reckner. He's going to take it from here.
Thanks, Charles. So we did want to point out a couple of highlights as far as some of the major carriers in our area. The first one being Aetna. One of the things that Aetna did do, as Charles had mentioned, that they waived all diagnostic testing for COVID-19. In addition, Aetna is now offering zero copay for telemedicine for any reason. We've seen this, as Charles had mentioned, throughout the industry, and you'll see on these slides that most of the carriers now are going ahead and waiving the copays for that telemedicine, and it is generally expanded to any reason. Also, CVS Pharmacy, with conjunction with Aetna, has waived any charges for home delivery for prescription medications. Another nice thing is the fact that they are waiving the early refill limit on 30-day prescription maintenance medications, which has always been a point of contention, because they really cut it to the edge as far as when you can get your medicines refilled, and now they're being much more liberal on that. Through the Healing Better program, members who are actually diagnosed with COVID-19 will receive a care package. It's going to include CVS over-the-counter medications for symptom relief, and also packets of personal information for household cleaning and supplies to keep others in the home protected. And Aetna will proactively be reaching out to members who are most at risk for COVID-19. Highmark has previously had waived out-of-pocket costs for COVID-19 testing and telehealth, and now they're actually extending that to include inpatient hospital care for COVID-19, so you will not incur any deductibles, co-insurance, or copays through the end of May. And we want everyone to keep in mind this is for group coverage, individual ACA coverage, and Medicare coverage that's fully insured. When we talk about self-funded plans, although Highmark may be the administrator, that election is made by each individual employer or sponsor of the plan. So you would want to go ahead and check with your HR department. Highmark also has expanded their both in and out of network tele-addiction services for members in Pennsylvania, West Virginia, and Delaware, expanding the opportunities there for treatment. And it's for those individuals that are in treatment and need immediate help, and there will be no out-of-pocket costs. For United Healthcare, they're waiving the cost sharing for COVID-19 testing and treatment. And that's for all their markets, the Medicare Advantage, the Medicaid, individual and group market members. And that is again till the end of this month through the emergency. Up until June 18th as well, United Healthcare will be waiving costs for the telehealth medicine for, again, the same group of clients. Finally, Cigna is waiving their customer cost share, again, for COVID-19 and co-pays for office visit testing and treatment through the end of this month. They're waiving also customer out-of-pocket costs for virtual care screenings for COVID-19, again, through the end of the month. And they're opening up virtual medicine not related to COVID-19 until the end of the month. And in this case, you may end up seeing potentially out-of-pocket costs. One thing to keep in mind is that Cigna is one of the groups that does do limited self-funded as well. So again, you might want to check with your HR department or your broker to see if the self-funded member has chosen to pick up these COVID-19 options. And now Debbie will speak to you on navigating benefits online. Debbie?
Hey, thank you, Mike. So what we're seeing nowadays especially is many companies are adding online benefit systems. This is, it's a great way with working remotely for the employees to be able to enroll in benefits from their phone or their computer or their tablet, wherever they are. As long as there's an internet connection, then they can enroll in their benefits. So we're seeing more and more companies adding this option to their benefits. And this can also be used for onboarding, which is great for new hires. It has everything right there in one place. So you can do open enrollment meetings. You can do webinars for open enrollment meetings, and they can be recorded just like we're being recorded today. Then you can put those on your Ben admin system. And for new hires going into the system, they'll be able to listen to the video to learn about their benefits, as well as comparisons, side-by-side comparisons. They're great products, and they're really great assets for companies to use. We're also seeing some companies provide videos for new hires. So it's similar to a Zoom or a webinar, but it is actually a video where the employees watch the presentation of their benefits. So those are just some ideas that we have seen really coming to fruition. Started a couple of years ago, maybe 3 or 4 years ago, but really more and more prevalent nowadays when there's so many people who are working remotely or even out in the field. They can use their phones to log in and enroll in their benefits when they're on a break from their work. So those are some of the things that we think are really important. So as a summary, we've gone over a lot of information today. Talked a lot about COBRA, a little bit of a deep dive into COBRA and FSAs, the CARES Act. There's a lot of information talking about EAPs, Employee Assistance Programs.
Hey Molly, this is Nora Weeder calling with Karen.
These are really important for a company.
I need to verify some things with you. 32369-2900. Thank you. Take care. Bye.
To their employees so that they have someone to talk to. And Dr. Bowman does create customized EAP programs for companies. He also goes into companies and talks to their employees and helps them with any issues. He does a great job. And then also Weiner Benefits Group. We offer a lot of different services, but one thing I'd like to really bring to your attention, we talked a little bit about Medicare. That's one of the things that we do specialize in addition to the medical, dental, and all of the ancillary lines. But if you look down on the right-hand side, you can see it says COVID-19 Resource Library. We would like to offer that to all ABC members at no cost. It's a great benefit. You'll be able, you have to log in. So it does you create a login and a password, and we have to send you the information in order to get into it. But when Jean sends out this presentation, we will also provide her with information so that if you want to sign up to be able to receive the COVID-19 resource library from us, we'll be able to send it to you and show you how to get enrolled online. So thank you so much for your time today, and now we'd like to open it up to any questions.
Okay, Debbie, thanks. It's Ed from ABC. We appreciate the presentation, very informative. Does anybody on the call have any questions? You can either unmute your microphone and ask the question, or you can send something through the chat line at the bottom of your screen. So we'll open it up for any questions that you might have. Won't everybody speak at once? Anybody have any questions that they'd like to ask of Weiner Benefits before we close this thing out? Okay, well, we will send a copy of this to everybody that's on the call today, as well as the rest of the members. If you have any questions at that point, their contact information will be there with it. Debbie and the rest of your group from Weiner, we appreciate you spending some time with us today. Everybody have a great afternoon, and we'll be in touch. Take care.
Thank you.